Hello there, guys. Welcome to today's live stream. And we're going through the Forex forecast. We're going to take a look at all that important stuff coming up for this week, as well as some charts of interest. As usual, we're going to go over some currency heat map stuff. We're going to go over what currencies are strong, what currencies are weak for the week ahead. And yeah, we'll go from there. We've already had some data out today out of the UK. We saw the claimant count change coming at 50.4k up from 8.9k, so big difference there. And we've had an increase in average hourly earnings up to 5.9%. So we're going to be taking a look at those all important currency pairs that you want to take a look at. So drop them in the chat. Let me know what you want me to take a look at today. Also, let me know if you can hear the keyboard. It's a new keyboard on the go there, and I don't know if it's a bit loud. It was gifted to me, and so how I feel about it. You know, sometimes when you change through change over devices, it takes a little bit of getting used to. So, looking at cable first of all, we're going to go through cable, but drop it in the chat. Let me know what kind of charts you want to take a look at. If you're also interested as well, I am running a webinar this evening on some trading strategies, or a trading strategy that I feel is one that can work for you. So if you're interested in that, you can head over to our sort of Facebook, Twitter, whatnot, and get the details for that. But if you are interested in that anyway, sorry, I'll just post a link in. It's going on at 5 p.m. GMT, but you know, you can sign up. If you're not going to be there, you can sign up and get the recording after. So if you are interested, I'm just going to drop the link in the chat, and that is for a webinar on a trading strategy that I'm going to be taking you through at 5 p.m. GMT. CG, hi, John. I can hear you loud and clear. Thank you for letting me know. And you want to take a look at pound yen. So let's go and do that. So pound yen, interesting chart at the moment. Obviously, the dynamic between the pound and the Japanese yen recently has been very, very bullish. You know, the market is in a clear upward trend here. And what we've seen is we saw a little bit of yen strength entering into the market. And that has been sort of quickly, we've seen price rebound those kind of yen strength moves. And that could be down to the fact that we are still seeing a little bit of that sort of rhetoric from the Bank of Japan, that there is potential for them to not change anything with rates, not to jump into anything too soon. So we're still starting to see a little bit of that yen sell-off. However, we're coming into a crucial point. Very, very crucial point. Hi, Ratish. I'm very good, thank you. Hope you're well too. And this crucial point is, you know, this level up here at around about that 200 and sort of 0.67 area. Okay, so this level in particular is just an interesting level in general. You know, you've got, if you're looking at it from a point of resistance in terms of technical trading, then, you know, the market is potentially about to turn, I would say, from a technical point of view. And the reason why I would say that is because we're approaching highs. You know, just in theory, you don't want to be a buyer at swing highs. So naturally, in my head, I want to be looking more for the selling opportunities in the market. If I was asking myself where I'd like to be a buyer in particular, then I'd like to be a buyer down towards these kind of swing lows in here, perhaps even sort of a little bit higher up into the 199 handle. Depends on how aggressive I typically want to be in this market. Now, I'd actually say that this pattern that's building here is a bit more of a bullish pattern. in my opinion, in the bigger picture. The reason being is what we can often see is when a market rallies into a level of resistance, it kind of creates sort of higher lows into a level, then that level can be broken and the market can be seen to continue to push higher. That's just kind of how I view things in the market. So that's potentially bearish. However, we do have some data to that this coming week. We have the potential for the BOJ. That's the capitals then. BOJ interest rate decision, and that's coming on Friday. Now, the idea is that they are going to hold interest rates, but potentially we're going to see some bond tapering. Okay, and that's basically leading to sort of less stimulus. Okay, now central banks often have different types of tools. Oh God, sorry, this new keyboard is not helping. Central bank tools at their disposal. And these tools can range from sort of interest rates, okay, which is the most common one that we know of. But then there is obviously, you've got QE, okay. That's a tool that they can use. And obviously, you have sort of easing and tightening as well. And another tool they can kind of use is obviously bond control, essentially. And the Bank of Japan obviously were very known for this in terms of especially the yield curve control, which is classed as YCC, or yield curve control. And they had held their sort of yield curves between 0.5%. They then let it go up to 1%, and they were kind of happy to sort of revolve around about 1%. We have seen it breach the yield curve control since, so it has been up to sort of 1.4% at its highs. Let's see if I can actually bring that up. I might actually have it available for us to look at. Let me go to bonds. Let's go to yen. So this is what I was talking about essentially. The Bank of Japan sort of held it around about this 0.5% level for a while, and then back in January, it was around about March 2023, they opened the door up to a yield that would be higher, up at 1%, and they were happy to let it float around 1%. So this is the sort of condition that we've seen in terms of the Japanese bond yields over a period of time. Since that sort of 2020, they've kind of let it just continue to drift higher. And that has actually coincided with a little bit of a move in the Japanese yen. If I just actually bring a compare tool up now and just bring you onto dollar yen, for instance, and what I'm going to do is I'm just going to highlight that, pin it to the left-hand side. You can see the correlation here, especially from sort of 2016 onwards. Market has been fairly close to following that path. Obviously, you've got the other dynamic of it, of the US dollar, but they've let this float now, and they've let it float up towards that sort of 1% area. So are we going to see them starting to kind of slow it down, that stimulus? And if that's the case, could bond yields potentially move a little bit to the downside here in the short term? Obviously, that could impact dollar yen. Dollar yen could reject this area and continue to trade lower for dollar yen, which is trading currently at sort of the 157. So really interesting dynamic going on the Japanese yen at the moment. And if I just flick back over to pound yen, how will that impact that? Well, we've also got two sides of the coin with this, haven't we? We've got the Bank of Japan and the Bank of England. Okay, now if we take a look at sort of both of these kind of rhetorics here, we've got a potential for a sort of hawkish BOJ, okay, which could equal a bit of yen strength in the markets, okay. And if we look at the data that's come out in the UK today, so UK unemployment rose, okay, and obviously the claimant count rose. The only good positive news, I guess, was average hourly earnings rose to 5.9%. However, potentially in September, there would be a 25 basis points cut from the BOE. Okay. So we've got two diverse central banks here. Okay. We've got the BOJ talking of essentially tightening. Okay. That's what rising interest rates will do and things like that. And you've got BOE technically talking of easing. Okay. So in theory, we could see a pound that depreciates. And I actually think because of the election, you know, let's say Labour government wins, I do think that'll be fairly negative in the beginning for the pound. Okay. Because a lot of rhetoric is, will that follow a similar path that happened previously? So I do think that could be negative for pound, yen, strength. Okay, potentially on the back of less stimulus, more tightening. Okay, especially if we start to see inflation tick higher in Japan, would prompt action. Okay, so this is the way I'm kind of viewing the market at the moment. I'm viewing the market in this way. Okay, that's from a fundamental perspective. Just quickly, I know you guys might not be too much into the fundamentals. You might be looking more at the sort of chart and how that's positioned in terms of actual action. But this is the sort of longer term outlook. Okay, and I can see here that you've said, CG, that you're kind of looking to go short in this particular market. So that makes sense to me. Makes sense to me from a sort of fundamental perspective, macro perspective. So how do we action that? You know, to me, this is where, you know, you've got to try and blend the two together. How do you action that plan? So if I'm looking at it from a weekly chart right now, a couple of different things that I'm noticing. Obviously, the market is trying to push into new highs. If we look at the daily chart, the story is a little bit different, where you've got the market attempting to try and push this sort of 200 spot 50 handle, and we're not quite getting the momentum here at the moment. Okay, so I'm looking at pound yen thinking, where's the sort of idea to get involved? And like I said, I like trading from highs and lows. So let's say you had the sort of opposing thoughts to I do. Where would you want to buy? Well, you'd want to be a buyer at lower prices, right? You'd want to be a buyer down towards this 197 spot 50 handle. So naturally, you don't even want to be long here. You want to be looking for longs down towards that lows. If you want to be short, where do you want to be short from? You want to be short from higher prices. So to me, from a technical perspective right now, it's pointing more for a little bit of a downside move. We've got the idea that buyers no longer really want us to try and get involved at these highs. They might try and bail out of positions. People that have been long from this recent push up might be looking to get out of their positions as well. If we look at the stochastic's quite interesting at the moment, although it's not really painting the picture of the market has made new higher highs or whatever. It's not really talking about anything like divergence or anything. But if price were to kind of breach that sort of 200 spot 50 handle, then there would be a very, very good chance that there'd be some divergence forming on the stochastic. And that's where I like to use indicators. I like to look at indicators, especially when there is some kind of difference, because price creates the indicator, right? And when they are not following each other, you know, there's got to be a potential reason to why that is. Okay, it means that maybe there is some underlying issue. Okay, And essentially, with a stochastic, you're looking at momentum. And if this market is trying to make new highs, but there is a lack of momentum, which is visually seen from this stochastic, then maybe there is going to be some downside. So how would I action this? Well, I'll be looking at key highs and lows. So ideally, I'd put an alert around about this 200 spot 50 handle. And if I was to see price push into that, then I'd be looking for my patterns. I'll be looking for my double tops, my kind of head and shoulders, anything to suggest here that sellers or buyers were running out of steam. Even if we get a large bullish candle into that level, that could be good as well. That could create that sort of influence of a big move to the downside as well. Yeah, I like the idea of maybe looking for that push into the level and then maybe a bit of a rebound to the downside here on pound yen. Okay, so if we go take a look at the hourly chart, everything's still bullish here at the moment. There's nothing for me to really kind of jump on the back of. Where's this sort of extreme? We can argue that we had this kind of consolidation back on the 4th of June. The price has tested and we're starting to see selling as well. So early sellers might be able to get short at these kind of levels. But I'm looking for the extreme. I'm looking for these extremes that have been felt in the market in the past. So I want to see price try and breach those extremes and fail. You know, if they fail to breach, then the market moves lower. Now, the beauty, if the market moves lower anyway, is let's say the market just continues to push lower here now, then great, because all I'll do is I'll wait for price to come and test back up at the highs to see if it fails again, because what that would tell me then is that maybe price isn't going to push back to the upside. And again, looking for the market to fail to make new highs is something that we can use to our advantage. Okay, so that's why I see pound yen right now. Fundamentally, I like this play to the downside. It's just, you know, are we going to get that move? Dollar yen is going to influence this massively. Big week for the US dollar as well. You know, potential for dollar yen to push 160 again. If we hit 160 again, then it might prompt some intervention from the Bank of Japan, where we could then see an aggressive move to the downside. So hopefully that makes sense. Bit of a long-winded way to say, CG, I like the GJ short there. Ratish, thoughts on XAU, so gold. Yeah, let's go take a look at the metal then. So I actually really liked longs going into this week. And I did hold a couple of longs. I'm out of those longs now because I was looking at short-term long positions. And that was because we had this drop on NFP. Okay, so let me just change the banner there so everybody knows we're talking about gold. But yeah, essentially, I was looking at the rebound of NFP and I ended up buying around this low, which was a nice move. It was basically the lows that formed back here. And yeah, NFP was a shocker, wasn't it? I don't think I've spoke to you guys about NFP just yet, but NFP was a shocker. It really kind of told me where the risk was in the market, in terms of market is very much pricing in cuts by the Fed, and the Federal Reserve have been very open in terms of saying they will cut if the labor market is under pressure, because one of the mandates of the US Federal Reserve is to keep full employment. Well, if employment is falling, they're not achieving that mandate. So they need to cut rates to keep full employment, but also they have the battle to try and stem growth in inflation. Now, there was actually some really interesting data overnight, and United States Senator Elizabeth Warren actually wrote a letter to the Federal Reserve, basically urging Jerome Powell to cut interest rates. And in that letter, she basically outlined the two main components that are causing inflation. Was insurance. Let me actually get it up. I'm going to get it up for you, actually. Let's see. Yep. So she said, I'm just trying to find the line where she said, I did see the image this morning, but I didn't keep a hold of it. So I'm trying to find it. Okay, right. Okay. So higher interest rates are threatening the economy and risking recession. Indeed, it is driving up housing and auto insurance costs, which are the two key drivers of inflation, threatening the health of the economy and risking a recession that could push thousands of American workers out of their jobs. You have kept interest rates too high for too long. It's time to cut rates. And that's coming from a US senator. Now, obviously, the Federal Reserve are meant to be away from politics. Okay, they're meant to be very neutral. So that's what I just thought I'd just share with you, that little bit of news that came out there urging the Fed to cut rates. Now, obviously, we have an FOMC rate decision Wednesday. Okay, so the FOMC is forecast to hold rates at 5.5%. So this is relatively high, right? We don't usually see as well a central bank holding rates for as long as they have. You know, they held rates on the low side for too long, and now they've got this FOMC rate decision coming up this week, and now they're coming under pressure to try and do that, right? So FOMC forecasts to hold rates at 5.5%. In my opinion, I think they will hold. I don't think they will cut rates. And NFP was a big part of that. NFP coming in higher puts doubts on cuts, okay? Because you want to see the employment getting worse. Now, the unemployment rate did tick up. Uptick to 4%. And this is where this is where I see the Fed kind of in a rock and a hard place. I think the Fed, if employment at 5% is considered healthy, okay, considered healthy. So they're a way away from that. They're a way away from that. You know, a big shock in unemployment to get from 4% to 5% would need significant sort of higher inflation, I think, and more sort of ideas that the market is going to stay at this sort of 5.5% for a lot longer. So in my opinion, I don't think the Fed will wait until 5% unemployment. I think they'll go before that. I think they'll probably go more towards November now. Maybe they'll wait for the election to come out. But essentially, you've got maybe a bit of a non-starter this week. You know, the market is kind of lulled, and this kind of brings me back to gold in a way. You know, is gold the play in terms of safe haven? You know, last time Donald Trump got him, gold actually plummeted. If we actually go back to 2016, initially, here we go, November 2016. This was what happened to gold price when Donald Trump entered or won the presidency, right? We had this huge downside shift, and the dollar was very, very strong in that period. Okay, so we had like a month of downside in gold, and I think that could possibly happen again if we were to see another Donald Trump victory in the election. But right now, price is kind of holding at this kind of area here. Okay, so what I'm looking at essentially is you've got these weekly lows from a technical point of view up, and you've got these weekly swing highs, and it's a range. What do I love trading the most? I love trading ranges. So this is why I went long on gold at these lows after NFP. Basically looking to see if price would target back in at these lows here. I'm actually out of the trade now because, you know, I'm a little bit more worried about where the risk is in the market. And the risk for me is, does the dollar get stronger, significantly stronger as well? And does that push sort of gold prices to the downside? But until that breaks, you know, from a necessarily just want to jump on shorts again, I try and think of where's the risk and reward. So if I was to go long, where's the best place to go long? It's the best place to go long at those lows, because my
reward to risk ratio is increased significantly by going in long at lows. Does that mean it's not? Does that mean it's going to move higher? Absolutely not. It's just from a technical perspective. If I wanted to be short, let's say you want to be short at prices now, where's the safest place to put my stop loss? It's above those swing highs. And, you know, I don't have any reward to risk ratio. I might have a high probability trade in terms of price could come down towards these lows, but I don't have a good reward to risk ratio. Instead, I'd want to be short from previous highs. So you've got this 23.76, or you've got these highs back up here at 24.23. So that's the way I'm kind of looking at things like now. Unless price kind of breaches, comes in, forms a high and rejects it again, then, you know, then I'm interested in maybe a short-term move on gold. But for now, while the market is in this kind of a bit of a lull, because we haven't got that much data this week compared to last week, then I like the retracement play here. I like the retracement play. Sorry, I missed a few messages. Juan, welcome to the stream. We've got a message here as well from TradeQuotex.com. The upcoming Federal Reserve and Bank of Japan interest rate decision that could significantly impact gold prices. Hawkish stance from the Fed indicating more aggressive rate hikes could strengthen the dollar and weaken gold. The dovish stance or any signs of... yeah, I don't agree with the more aggressive rate hikes. I just don't see them hiking, but I don't necessarily see them cutting aggressively. You know, I'm pretty sure the CME Fed Watch tool right now is pricing in cuts in November now. So if I'm just going to bring that up. So in July, there is a 91% chance of no change. September, there is a 52.6% chance of change. November, there is a 67.2% chance of change. And that's actually decreased. That has actually decreased a little bit. Let's have a quick look at December. So December is where people are actually looking now. So 88.4% chance of a cut from the Federal Reserve in December. So there might be some significant changes there. Right, guy. Hi, John. A lot of the Swiss pairs are consolidated. Where do you think the Swiss will go? Yeah, I quite like Swissy at the minute. Swiss on the currency strength meter and both the 50 MA strength meter and the previous strength meter, pretty bullish. I'm just going to have a quick look at it. Just bring it up. So Swissy, I've got as +7 on my strength meter and +5 on the 50 MA strength meter as well. So Swiss is fairly strong. You know, I like the idea of being a buyer of the Swiss franc. Again, we need to try and just identify those weaker currencies. I'm seeing the Australian dollar as a weaker currency at the minute. So Aussie Swiss could be a little bit of a play here. Again, let's have a little kind of look into where price could go to. You know, we've moved a significant way lower the past few trading weeks. So I would be looking at maybe trying to see price come down towards this 58.40 handle. We'll go to the daily chart. That's these kind of daily lows in here. Again, because if I'd want to be a buyer, where would I want to be a buyer from? I'd want to be a buyer from down here. So that to me makes sense for good targets. The way I'd look to trade this, I'd be monitoring those highs and lows. You know, I'm looking at this now on a 4-hour time frame. We've got this high in here. Okay. We've got these highs recently as well. And I think if price, again, if it fails to make new highs, then what's that telling us? It's telling us that buyers aren't willing to hold past previous highs and sellers are willing to get involved at those points. So I'm looking at this one here. And, you know, the way I try and play this potentially is watch this 15-minute now. Okay. So if we see a market moving, okay, and it is going to bounce, you know, if we get a little bounce, then I'll be looking to see, does it fail? You know, we've tried to breach this high here. We've kind of failed above those highs as well, all through there. So is that almost like a little bit of a reversal signal for us? So I like Swiss franc against the Australian dollar. I think that's a potential good play. Let me just have a look at other strength meters as well. We've got Euro being fairly weak as well. Euro Swiss is another market we quite like downside on. And, you know, this is all to do with the European elections as well. And Macron calling that sort of snap election, big far right movement, or the far right party movement over there, getting some traction. And that could put some instability into the euro. So Swiss franc against the euro could be quite an appealing market to look at as well right now. Looking at that weekly chart, you know, we are approaching some key swing lows. So that's my only sort of difficulty with this. We've got some swing lows coming in, perhaps around that 95.60, 9600 level. But again, I'll be on this 4-hour time frame. I'd be saying to myself, where does price form a high? Do we get a rejection of a high? Very much like what we had in here. So, you know, my idea would be, let's see if price could push 96.56. Do we get a rejection? Does the market continue to trade lower at that point? But I'd be looking for shorts, Euro Swiss as well, down towards this kind of area in here. That to me makes a lot of sense. You know, you could argue Euro Yen's a good short as well. Nothing to do with the Swissy, but with the Euro side of it, good potential short there for Euro as well. If you look at the 4-hour time frame, we've got price trying to find support at these lows. Got those lower highs coming in there as well. That could be a good sort of point for price to kind of trade through these lows and try and punch a little bit lower. Yeah, back towards maybe 164s. Other Swiss pairs that you could look at, I'm just trying to see, you know, Kiwi's had a little bit of a bad time lately. CAD has had a really bad time. So, you know, there's potential here for CAD Swiss shorts as well. I mean, look at that as well. You've had a big drop in the market, consolidation, you know, that usually leads to a bit of a breakout. You know, quite like this area in here, this round about this 66 handle. It's kind of these lows that were formed from this kind of consolidation that was built in the market on CAD Swiss. And I like the fact that we kind of paused here before seeing another rollover. So if price was to kind of make its way slowly back up to 0.66, I think that could be a good opportunity as well. So I'd be keeping an eye on those type of markets in terms of the Swiss franc. Thank you, Ikaw. You're welcome. Hopefully whatever I said was good. But yeah, let me know what you guys are going to be trading this week. It's going to be a difficult day until tomorrow. 1:30, we've got the US core CPI figures. Expected to come in a little bit lower. Again, is inflation remaining sticky? You know, that's the question as well. I think inflation rates around sort of 3% are going to be probably become the new norm. It's at 3.4% at the moment. You know, when are they going to see that as a point of, okay, well, 2% inflation target is not the one anymore. Going on to the dollar index then. Let's have a quick look at how the US dollar is performing going into this trading week. We kind of looked at this, you know, I feel like 104 was definitely the area that if we had breached, I would have definitely been switching my bias more towards that bearish side of things in the US. I'm very sort of happy that I didn't necessarily, didn't mean to do that, switch my bias too soon. You know, I still liked that dollar. I kept saying it. I felt like the dollar is undervalued at the moment, and I still think it is. So I still like the idea of dollar strength up into sort of 107s. If we breach 107s, then I'm looking for 110s, even up at sort of 114 handle on the US dollar. Because again, what do most markets trade off of? It trades off the difference between central banks, and if the Federal Reserve are forced to hold rates higher for longer, because they're not quite seeing what they're seeing from the data. And then you have other banks like the European Central Bank, Bank of Canada, now the potential for the Bank of England to cut rates. They are going to be under pressure, especially the likes of the euro. So euro dollar short, I think makes a lot of sense right now. Makes a lot of sense. Cal, are you doing a webinar at 5 p.m. today? Yes. If you actually scroll a little bit higher up, I've put the link onto YouTube and Facebook if you do want to join that. Let me just see if I can. I can't copy that again. I can only show it again. So I'm just clicking on it too many times now. Let me just quickly grab the link for you again. So if you are interested, I'm going to go over sort of a strategy that you can work and implement in the market. And yeah, come along, join in the conversation, ask me some questions. Sorry. There might even be a special sort of giveaway at the end, but I can't go into too much details here. I can only do it inside the webinar. So if you join it, there's potential something there. Okay, I can't say what or what it is, but yeah, potentially there is something there for you if you join. So yeah, look at the structure play here as well on the weekly chart. This is why I love trading with weekly charts. There's just less noise in the market. You've got this nice sort of swing here as well, where the market's making higher highs, higher lows. You know, that to me is a bullish structure when it comes to trading markets. So, you know, I like the idea of being bullish US dollar. And yeah, looks to be playing out right now. I think if we get a Fed that is still data dependent, still looking for the data to kind of come in line with those inflation targets, then they're going to leave rates higher, and that's going to see a dollar move higher, in my opinion. VIX is starting to just gather a little bit of storm as well. We're starting to see some downside in stock markets. Again, just coming back to that FOMC pressure there. Euro dollar, huge move in euro dollar. Over the weekend, there was some decent, well, not decent. If you were euro long, you would have been very disappointed because we saw that kind of snap election call from President Macron, and euro dollar gapped lower and has continued to trade lower. I don't see this necessarily turning around right now. We've kind of created that liquidity up here. The market's moved to the downside. Again, if I look at this from a sort of weekly chart, we had a strong sort of bearish weekly close. The market's making lower lows, lower highs. You know, is this a move now back towards this 1.06 handle? So I think the thing with euro dollar right now is we're able to kind of look at the idea that if the market is going to be pushing into this sort of impulsive phase, how can you trade that? You know, where is the trade? You know, and for me, look at the daily chart, look for your pullbacks, look at your 4-hour chart as well. You know, I like where the 50 MA is. So for me at the moment, you could argue that there's a nice little resistance up at 1.0770. The only concern is the close of the gap. You know, a lot of charts showing gaps on euro dollar. So if we do get a close of the gap, then maybe there's a bit of a continuation there as well. But in theory, if the market is going to stay to the downside, then it could be making sort of lower highs, lower lows in the market. And yeah, I like shorts on this market in particular. And I'll be looking to see on any kind of rallies, do we get the opportunity to be short euro dollar right now? You know, if I look at the makeup of the sort of moves that have happened in the past, you know, you get that sort of double top move, market comes in, pulls all the way back up towards the highs, and we get this kind of lower high, lower low play. That does change for a couple of days, but as soon as we kind of break into new lows again, the market really goes for it. So that's what I'm looking for. You know, if we start to see a pullback, that's fine, but I'll look to see if the market can start failing to try and build into new highs, you know, up in here. And then that gives me my sort of edge when it looks to taking a trade. Maybe I wouldn't have taken this initial position. You know, that would have spooked a lot of people. But, you know, anywhere in there would have been fine. Market coming and testing a new high, failing, coming and testing that high, failing. That to me is my sort of bread and butter moves for out there. You know, if I go back to this one, what happened? Well, the market kind of broke, consolidated. What does it do? It tries to make new highs, fails to do so. Market moves lower. Again, look at all these kind of failures to make new highs, successive new highs, and then the market goes to the downside. So that's what I'm going to be looking for here. We've got a high that's being printed at the moment around about this 1.0770. Does price fail to make that new high? And if it does, can I get on an opportunity to the downside? 𝖥𝖣𝖣yi, pound yen. Yeah, we've already kind of covered pound yen in depth at the start of the live stream. I will just quickly go back to it, but essentially what I'm looking for is some downside moves if price can reject 200 spot 50. So in the short term, I think it's going to be a bit more bullish, maybe until the Bank of Japan on Friday. And then we might get a little bit of a shock move. If we see any kind of bond tapering or any kind of push towards rate hikes, then the yen could strengthen a little bit. So I do quite like any kind of shorts on any moves higher on pound yen. What other charts can we go through then? So another chart that was kind of interesting to me this week was oil. Okay, quite like the idea of oil markets at the moment, and the reason being is because of OPEC basically coming out and saying that production could start to increase in the fourth quarter of 2024. Obviously, we're not in that at the moment, but there's potential for the market here for a little bit of downside in the short term before seeing maybe a little bit of an increase. But what's interesting at the moment, we've had this kind of consolidation in here. The market has then driven lower on the back of that data last week. And then we've come into support. So we had this big demand zone sort of building up from sort of $73 down to $71.25. And, you know, this was a zone for me where I felt like we could rally from. You know, I had an alert around about the $72 area, which didn't trigger, unfortunately. So I missed out on this overall move that's formed in the market. But we're in this area now of volume. You know, if I was to grab a volume profile, go from the swing high down to the swing low, you can see all this volume that's being built in here. Now, what would be interesting to me is if price fails to kind of get below this low again, because what that tells me is maybe it's been accepted back within this value. So there could be an idea that maybe we push back down towards these kind of lows before seeing price continue up to the other side of value, which would be around about that $80 handle. And that would be interesting to me in terms of trades and opportunities. Again, where's the low that the market has found support from in the past? You know, can that area act as support again? So we're going to the 4-hour time frame. All this area through here essentially has acted as support. Are we going to see the same thing again? We've got this consolidation down here as well. There could be opportunities for buyers. So anything in that kind of region, I quite like. If we do then see prices moving higher before the cuts, then that could be something interesting. Though I did see as well that there was a sort of, I don't know the details of this too much, but Occidental Petroleum Corporation trading on the New York Stock Exchange correlates with US oil greatly, and Warren Buffett apparently has put a big sort of buy-in on this. Which, what does that tell you? So if I just go back to US, sorry, if I just go back to my oil chart in here, and if I just grab the compare tool and just bring Oxy on here, you can see the closeness in correlation. Okay, if I just then pin this to the left, and then change that to regular. Change that to regular as well. You can see how close this is impacted by oil, obviously, if they're a producer. So, you know, there is a potential there for the fact that we've seen this kind of spike in oil could almost drag this Oxy price up as well. So that could be something that you can look into. Let me just see if that is actually available on Blueberry's platform, because I haven't actually double checked that. So if it is, that might be something that you can look into in terms of a different kind of play to what you're usually looking for, especially if you are an FX trader. You know, you might want to not expose yourself to the risk in the oil market because it can be fairly liquid. But let me just see if I can grab this up. Looking for Oxy. Yeah, you can. You can trade this with Blueberry. Bring up the chart window there. Yeah, so Oxy can be traded through Blueberry Markets on your MetaTrader 5 platform. All you need to do is go to Market Watch, open Show All Symbols, and then the easiest way I find is go to the bottom of there, just click the plus button, and click to add. It basically says, and when you click to add, type in Oxy, and it will be on there, and you can add it to your charts. But so you can see the correlation between this. So oil price is dragging higher at the moment. Oxy might follow it. Could be a good little play there in terms of risk to sort of an actual stock. Any kind of downside here would obviously be impacting that oil price as well. So be keeping a good eye on that. Let me just remove that. But yes, potentially some long oil plays down towards this sort of 76.50, maybe down 75, 75s. Hopefully that makes sense. Osmanwenko, Euro Swiss. Yeah, again, kind of already covered this one, but I will go back over to it. You know, I like shorts on Euro Swiss. Euro weak currency, Swiss a strong currency. So yeah, I like shorts on this. What I'd be doing is marking up these kind of highs. If price comes back into the highs and rejects it, you've got a good area to place your stop losses above those highs. So I'm looking for a bit of downside on these particular markets like the Euro Swiss. So yeah, keep an eye on that one. Right, let's have a little look at the stock markets then. Stock market's performing pretty poorly at the moment. Again, that kind of risk of no cuts coming is going to put a little bit of downside pressure on stocks. We've seen volatility on the rise here. You can see the VIX index up at 5.33%. That's going to impact your stock markets. We're starting to see a little bit of a decline here on the S&P 500. Big divergence as well on this daily chart. If I just bring in the stochastic here, you can see that we have market making a higher high. We've got a lower high here on our stochastic. What does that tell us? It maybe tells us that this momentum move that we had, which price made a new high with, hasn't been as strong as what we anticipated. That could then reflect into a little bit of a downward move here. So, you know, S&P 500 looking a little bit like it's in that sort of trading range there. Breach to the downside, could see lower prices coming into play in the short term. You know, I like being long the stock market. I don't necessarily like shorting it. You know, I've not really been as successful shorting it as I have been buying it in the past, and that's just because, you know, this market tends to trend higher, you know. But that doesn't mean that there's not opportunity there. Even if you don't want to be on the sell side of this, you could just wait to see price try and trade to the lows there. So you've got this kind of 52, sort of 35 and below. You know, that could be a good place to be a buyer. You've got the 50 MA running through there as well. Just set my alert up there. And if price comes back to that, that could be a good place to try and potentially get long from a technical perspective as well. You've got this kind of trend line support running through there too. So multiple different technical reasons to be long. Fundamentally, do I want to be a buyer of the stock market long term? Yes. But it depends. It depends on how the market shapes up in terms of this FOMC meeting as well. We're kind of probably going to see a range before that meeting, to be honest. But I think any kind of talks of holding rates higher for longer, it should have a bearish impact on stocks. You know, CPI data tomorrow, any kinds of upticks in CPI tomorrow will be a little bit bad for stocks as well. This is the Dow at the minute. Dow Jones pushing lower after making those kind of highs in here. Same with the DAX. I actually liked longs on the DAX. I've tried to get long 3 times on the DAX and been unsuccessful 3 times. So basically, I say unsuccessful. Didn't go to my full targets, but I did manage to get something out of it, but not as much as I would have liked. So essentially went long here. Price rallied up into my 50 MA, mean reversion. Took a little bit of profit there, moved my stops to break even, got took out. Went long again here. Market rallied higher, pulled in, rallied again, moved my stops below that low, got took out there. And as price came down into this level as well, I liked it, so I bought it and I got stopped. So not necessarily the greatest of trades there, but I took 2 profitable positions out of it. Could have had more, but didn't work out to be the way in the end. But that's the way the cookie crumbles sometimes. You know, this was technically a bearish pattern. Again, if you think about it, the market has formed this base here. And what has been happening to the highs, maybe this was a bit of an outlier, but the majority of the highs have been getting lower. And that typically is a bearish pattern. So breakdown in the DAX, you know, I do like longs, but maybe we're going to have to wait until price comes into this little area of support first before the bounce. So maybe just needed to be a little bit more patient there. But I like longs from those. Don't mind trying to take a couple to get a couple of hits on that. Same with the FTSE. You know, I was kind of eyeing up the FTSE for a long position, but I'm just waiting for a little bit more of a dip here now. I quite like the idea of being long this morning, but price failed to make a new swing high. So I kind of just left that after the data, and then the market's just since kind of rolled away anyway. So didn't really need to get into that. Let's go flick back over to another market that I quite like to always look at, and that's the bond yields. You know, US 10-year rallied, stayed above that 4.35%. You know, usually the correlation between the dollar index or the US dollar in general and the US 10-year is positive. So higher bonds or higher yields, stronger currencies. Okay, so that to me is something that I'm looking into right now. Are we going to see that continuation? Again, this weekly chart looks pretty good for yields as well. So I think, you know, we could be maybe seeing another 5% on yields, which should increase the strength in the US dollar. Okay then, guys, we've been running for about 54 minutes, 55 minutes. So I'm going to leave it there because I do have a webinar coming up this evening. Like I said earlier, if you are interested in joining me on that webinar, I'm going to go through a strategy that I use daily. And if you are interested in joining me for that, asking some questions, maybe giving your feedback, then feel free to join me at 5 p.m. The link is in the description. So, yeah, hopefully, if you are interested, you can join. Right, guy, might not be able to make the webinar. Will there be a recording? I believe there is a recording. I have set it up to do a recording. So just let me know if I've done it and you haven't received it. I can just drop you a DM with that at any point for you to watch at your own leisure. So, yeah, if you are interested in seeing it, but you didn't manage to catch it, just let me know on social media or whatever. And you can jump on and I can send you that anyway. All right. So thanks, guys. Thanks for joining me today. Appreciate all your comments and questions as usual. And I will catch you this evening if you can make this evening. If not, I will speak to you on Thursday. Be safe tomorrow. Big day in the markets. keep your risk low, and hopefully we can all take a piece of the pie. So thanks for watching, guys, and I will catch you later.